Off-chain. My name is Jimmy Song, and today is December 9th, 2017. Joining me today is Tone Vase. Tone, welcome to the show.
Hey Jimmy, how are you?
I'm a little tired. These early mornings
Yeah,
are getting to me a little bit.
I know, and oh man, I had like a seminar, I had a conference all day. I know I get to wake up 1 hour later than you, but
Yeah,
still.
yeah, that's very exciting. Tone's gonna be teaching all day. He's got a lot of stuff to do. But anyway, we got a lot of interesting things going on. Let's start with this story. This is the mempool. You can see the mempool when it was at its highest ever, maybe three or 4 weeks ago, November 12th. And right now, we are actually past it in terms of unconfirmed transactions in the mempool, or at least were like yesterday. A lot of miners were getting like 5 BTC in fees. Yeah, you could see the number of transactions are like there was this huge spike of one Satoshi transaction per byte transactions, and then all these other transactions started increasing quite a bit.
Hey, can we, oh wait, Jimmy, can we go for that? Hold on a second. That giant
Yeah,
spike, what the hell is that?
it's a bunch of transactions entering the mempool. Either they were all
What,
replaced
I,
by, well, no, they can't be replaced by fee because it was, yeah, this, I don't know what happened to this blue thing, but
right, the blue thing, right? What's the ranking on that? Is that one Satoshi per byte? So
so it was
that's
like two to
I,
five, and I think those like got kicked out of the mempool, and then basically they replaced it with one Satoshi per byte transaction.
no, I don't think it works. I don't think it works that
No, no,
way.
no.
I don't think who the
It
hell.
can get kicked out, and then somebody like replaced them effectively with one Satoshi per byte ones.
Really, this feels more like
Yeah,
spam
yeah.
to me.
It's
Like you put.
I'm pretty sure that's spam. But you're even if you spam it, the transactions just sort of roll out of the network after 4 days.
Yeah. Can we? Hey, so is it a time thing or is it not a confirmed fee? Right? Like when a transaction gets bounced back, right? Because when I was in Argentina, I paid a couple of people for like drinks, so I sent a couple of people $10, like $10. I sent two people $10 each, but I put in a somewhat of a low fee. So what are my expectations here? Is it 4 days or is it X amount of like blocks found? Like what's the parameters before they get kicked back? And I stiffed a couple of people on their drinks.
I think it takes like a few days. I forget the exact rule, but there's a rule, and if the mempool is above a certain size and there are more transactions rolling in, it'll just kick out the lowest fee ones, and yeah, something like that.
I'm actually going to check if those transactions are still
Yeah, they
pending.
they might be. I don't know.
They are. They are still pending. I will say that I had to bump a couple of transactions
Uh-huh.
up, and what is that? Yeah, and I actually ended up paying $100 fee for a
Oh
transaction,
man.
which and like $35 fee for another one because I wanted them to go through. And here's the thing, right? So I'm at this conference, and Michael Perklin from Shapeshift
Mm-hmm.
spoke, and I and somebody else did as well. And I asked them, like, hey, so how come you guys aren't using SegWit? So every time, like anyone that processes Bitcoin for other people, anytime they spoke, I tried raising my hand, and I'm like, hey, so you guys are using SegWit, right, to help your users out? And they all said no. And then and it was during Peter Todd's presentation, I asked Peter Todd, hey, so how come more aren't using SegWit? Or I think I asked somebody else about the core devs. And like nobody can answer this question. And then I got into an argument where with one guy saying, because I said, well, Coinbase is like the biggest threat right now because they still haven't implemented SegWit. Yet Brian Armstrong wanted bigger blocks. And the answer that I got was, well, maybe he doesn't think SegWit is safe. And I'm like, well, that's ridiculous, right? Because he was willing to fork the network, which we know is dangerous, but he's not willing to use SegWit, which had like a whole year of testing.
Yeah, I don't understand. Like for a lot of these companies, I think this is something that I've been saying. They want like the safest option possible, and for them, they don't have to do anything if there's a hard fork upwards, like as a business. But if they move to SegWit, they actually have to have developers doing stuff.
Yeah, but if they move to the wrong side of the fork, their business just dies,
well,
right?
I mean, that's something that's why they were all saying we're all moving to the same fork, and no one's going to actually mine the old chain. That was sort of their argument, which turned out clearly to be not true by the features. All right, so somebody in chat is telling me that that this guy changed the website like on November 29th, and basically he had a range like 1 to 5, and that it was all blue, and then he just changed it to one. That would explain why it's so smooth.
Right. So everything is spam. So both of those blue shaded areas.
Yeah, I mean they're really low transactions.
Them.
Even the red to some degree. I mean, like it's it's very low fees. But yeah, like you could see it like coming down now. I think the peak was yesterday. The thing I want to point out is that unlike last time, Bitcoin Cash is not more profitable than Bitcoin. That was the case last time. It's like 2.7% more profitable. But if you look at like the actual fees going on in the network right now, miners are making like 2, 3, 4, 5 Bitcoin per block, which is like anywhere from like 20 to 40% of the mining reward. So they and the CoinDance thing doesn't take into account fees really. So I mean it's kind of incredible how much money they're making off of each block right now. So it's extremely lucrative to be a miner on Bitcoin right now. Anyway, let's take a look at our next story. This is Tether as Fiat, the person that funded Andreas and made Andreas a millionaire. Tether as Fiat is also going to now fund Bitfinex'ed. I am officially seeking donations because obviously Bitfinex lawyered up, and Tether as Fiat is now going to pay the attorney fees for Bitfinex'ed, which is very interesting. I'm not even sure how Bitfinex is going to find Bitfinex'ed. I like your thoughts on this story, Tone. What's going on?
Yeah, I mean, I'm still not sure how, what do you call them? Bitfinex attorneys are going to find Bitfinex'ed, right?
Yeah.
Like, let's start there, right? So obviously, look, if Bitfinex, the company, knew who Bitfinex'ed was, I'm pretty sure the lawsuit would like dox him by now, right? Because here's the thing, guys. I don't understand what Bitfinex is doing. Instead of wasting money on a lawyer looking for an anonymous troll, how about you spend a little bit of money on a detective figuring out who the anonymous troll is? And then you may not have to sue him, because I don't know why I'm helping Bitfinex. You may not have to sue him because maybe if you dox him, he would go away.
Right.
But it's easy for Bitfinex to prove his lawyer fees. Like, all he has to do is just get a qualified attorney and have that attorney be on record that he's working for Bitfinex under a non-disclosure agreement to protect his identity. But the lawyer company can he can publish the bill, right? I mean, Bitfinex can be very, very transparent in this lawsuit, something that Bitfinex, the company, will not do, scoring even more points with the community.
Yeah, that and if Tether as Fiat is watching, what you can do is you can hire the lawyer yourself and just be like, hey, help this person out, and
that's true too.
That's even easier.
Yeah, and no, it's this is going to be interesting, right? Because Bitfinex has all of this speculative evidence he can bring to court. and see if Bitfinex can defend itself. Because
yeah, I mean, they're gonna have to open up their books to actually defend themselves, no?
Right.
Or attack Bitfinex. Right. It's like he's lying about us. Well, show us how he's lying. Well, here are our books, right?
Right. Right. It's going to be very, very interesting. It's going to be very interesting because Bitfinex's lawyer would probably, if it's financial crime related defense attorney, he can like say, hey, I mean, like they have to prove the allegations.
Yeah.
If they're going to sue my client, they better prove his allegations are false.
And you don't want to go through a discovery process for these lawsuits. The amount of financial information you have to reveal is kind of crazy. So,
right. I mean, they might have to prove that there's no wash trading going on. I think that would be very difficult for them.
That would be. All right. Next story. This one I just snuck in. But Ampex announced that buyers will be able to buy gold paying with Bitcoin. So Ampex is a big gold dealer, and they just announced it like yesterday. So now you can send your 1 Bitcoin in and get 11 or 12 ounces of gold, I guess, at a 4% cash discount for a limited time. Pretty interesting. Your thoughts, Tone, on gold's transition to Bitcoin, or people's transition to Bitcoin?
Oh, this is very simple. Wasting your Bitcoin on gold is so 2013, man.
To some degree, yeah, I think you're right. But it's kind of crazy that that people are, yeah, I mean, like, even though a lot of the gold bugs seem to be coming around, there was another tweet, I kind of wish I had it, about this guy that was criticizing Bitcoin in 2013, 2014. He's now like raising money for his film. He's like, can people donate in Bitcoin? Like, it's just like, okay, all these, people that used to criticize, they're sort of seeing Bitcoin as self-evident. So first they laugh at you, then they attack you, then they see it as self-evident. So it seems like we're there now, at least for some of the libertarian types. All right. Here's another kind of interesting story on the scaling debate. This is the most comprehensive scaling debate, like sort of history that I've ever seen. And it starts all the way in like 2009, April, talking about like Satoshi talking to, I think it's Mike Hearn about, Ripple to some degree, and like how it's going to compete with PayPal. And then, all the different like forum posts and what happened and how the, different things affected the scaling debate. It's a really good read on just kind of what happened, and how things sort of evolve from there. Your thoughts on like what's happened in scaling over the last 7 or 8 years?
This looks like an insanely long article. Like, I wish I had the time to read these things. Like this Pirate Beach Bums article from yesterday. Look, like the more and more I see this stuff, like the more I'm like, oh my God, the stupid that Satoshi must have had to deal with between 2009 and like 2011 when he left, like between Gavin Andreessen's nonsense and Mike Hearn's nonsense. And I mean, at least, what's his name? Jeff Garzik went kind of nuts, so like a couple of years later, like Daniel Larimer, who basically he said, dude, like I'm not going to be explaining this to you anymore. You're just too dumb. And then Daniel Larimer goes off and creates proof of stake. Like I feel bad for like Satoshi. Like oh my God, it must have been like he's like in a kindergarten class trying to explain blockchains to people. And the worst thing about it is these were the developers that were the only ones around to help them program the damn thing.
It's definitely really comprehensive. It's gonna take you like at least an hour to read. But if you haven't,
no, it's gonna take me at least 3 hours to read. I don't think people understand why I don't read.
You need an audio version. Yeah, no, but if you want to catch up, if you don't know too much about the scaling debate, this is where.
Oh, I remember that one. I know who drew that. The guy that sent it to me. Oh,
yeah,
awesome.
No, this is very comprehensive. There's just like pretty much anything and everything that happened is on here. And
are we mentioned at all?
Let me see.
Is there a picture from the woods?
No, unfortunately.
Damn.
Yeah, I did publish a couple of articles, and I got
I
mentioned, but yeah,
I didn't get mentioned.
no, unfortunately,
Damn it.
yeah. All
All
right, but
right.
anyway, it's
Oh yeah. By the way, shout out to Samson Mao for the
no
hat.
2x.
Thank you, man. The Note 2X hat. I'm still trying to get my hands on my Dragon's Den hat. Like a couple of people have one for me, but I've just been keep moving
Yeah.
around. And yeah, I do look like I'm in a witness protection program.
No, you
But
look like an FBI
I-
agent right now. Look at that, look,
yeah,
the
I set
earpiece
the
and all
camera.
that.
So you can see, right? So you can see the Toronto Tower in the back. I have no idea what it's called. I'm about to get like scolded by like the biggest Bitcoin community in the world because it's in Toronto.
Yeah, hey, at least he's got it in the background. That makes for good video. All right. All right, let's take a look at our last story. This is the one that I think I'm the most excited about. This is CoinKite Cold Card. The same people that have done Opendime, they are going to do a cold wallet. This hardware wallet that's BIP39 based. It's very interesting in the sense that there's an OLED screen and a pin entry thing directly on the device, which is really interesting. It also has a bunch of features. It's got security chip basically on the device instead of using it in volatile memory. It's an open platform, so people can use it for 2FA and a bunch of other stuff. But it looks pretty great. It has protection for the $5 wrench attack. Basically, you can put in 2 different pins. The secondary pin code will essentially unlock a completely different wallet. But yeah, it's a wonderful looking thing. It looks genuinely different than, say, Ledger and Trezor, in the sense that it's got a security chip. You don't need any software like on your desktop to hook into. It just sort of works on its own. Your thoughts, Tone, on the new CoinKite Cold Card?
It looks good. I'm actually gonna. I didn't even know about this, and I just saw Rodolfo yesterday from Opendime. I might see him again tomorrow, so I'll ask him some more questions about it. Wonder when the first prototype's gonna come out. Did they say?
I don't. Well, let's see if what it says on the pre-order. If you pre-order, it's $50, very affordable, and
Oh wow.
yeah,
Yeah, they do good work. I really like those
yeah,
guys.
it looks cool. I wish it had like a nicer case around it. I don't like the fact that it looks like a PCB board. But you know.
Yeah, I'm sure they'll work that out.
I like.
But that's their style, right? I mean, Opendime is like that. That's just their style.
I know, but like, you know, I just like my devices to look a little slicker. You know, that's all. But yeah, I mean, I like the features. I like how, you know, it's an open platform. I would love to see somebody make like Google 2FA work on it, and then like you don't have to use your cell phone anymore, something like that.
The wrench feature is good. Digital Beatbox has that. I love that feature.
I think you can utilize that for Trezor as well. But it's interesting because it's based on a different pin. So that's really cool. You know, and it's BIP39 compliant. You could probably import the same keys to a different wallet if you need to, and you can you know, have 2 people with the same wallet, something like that. I'd like to see more multi-sig stuff on this, but it's interesting because it's using MicroPython with microSD. Anyway, very excited. Yeah, we'll be watching it closely. Anyway, that's it for stories. Tone, how's the price doing?
Yeah, let's take a look at the price, and then I actually have to run to teach my seminar. All right, let's do a screen share. Actually, so when we were talking about gold, I decided to pull up the price chart of gold that I haven't looked at in a week. Here's daily gold, and those arrows were there from my videos on traditional markets that I did almost a week ago, right? So today is Saturday, and I did a video talking about gold last Sunday. So we go back 8 days, right? So 1, 2, 3, 4, 5, 6, 7, 8. So we were like right here on this green candle. And I drew this arrow and I just said, look, guys, like we're not making new short-term highs. So this pattern known as a cup and handle just got delayed a little bit. And I kept drawing these red arrows and I'm like, look, gold is going to break down. And there we go. Gold is breaking down. But look, today, you got that 9 with the green arrow. So I think the downward momentum is coming to an end. And you could have a little bit of bounce on the daily. And the weekly gold is looking ugly as well. So now below the 50-day moving average, approaching the 200-day moving average, color flipped. Yeah, so not great. I mean, I was expecting more red momentum, but it's just, well, for whatever reason, I guess I think the dollar kind of took a little bit of a hit. But gold isn't looking too hot right now. So, yeah, I wouldn't be wasting my Bitcoin on gold at the moment. What is this? What do I just draw? Why am I drawing? What am I drawing? I just wanted to move the chart.
Okay, there. Mm-hmm.
There we go. Here is the, move myself out of the way. Here's the weekly chart, and the weekly chart isn't telling us anything, right? The weekly chart can't tell us anything because we just came off a 9 sell count. So no matter what happens this week, it was going to be a no trade week based on weekly candles. So just wait and see what happens. But the week's coming to an end tomorrow. The daily chart is still bullish, right? Even though we're pulling back a little bit, this giant day kept us bullish. So this will probably get, I mean, the hardest number to get here is going to be an 8 because the 8 would have to close above the 4. So we need a brand new all-time high daily close. So let's see, getting a 6 and a 7 is going to be simple, but getting that 8 is going to be difficult. If we are pulling back all the way, the most obvious pullback, is back at $12,000, and after that we go lower. So let's take a look at the 4-hour and see if we're breaking down into that $12,000 zone. This is starting to look a little bit like a descending triangle to me. Maybe a bit premature, but I think all of the hype over, the futures is starting. So there's 2 triangles you can draw, right? So you can kind of draw. You can kind of draw a symmetric triangle like this if you use the wicks of the candles, which is more of a neutral triangle that can pop either way. Or you can kind of draw a descending triangle, which I'm going to do in red, that looks, something like this. Kind of peak in the same place, right? So neither one of them is all that great, but we're looking at here, this is at about 14,000 to 16,000. Yeah, you are looking at a $2,000 drop if this red triangle is realized. So I'll leave this on for next time. The indicator isn't really helping me at all on the 4-hour chart, useless. So now we're just going to keep an eye on these triangles and see if we can pop out of it. I think at this point, everyone is just waiting for the CBOE futures. Oh, speaking of the CBOE futures, I think I saw it on, hold on a second, hashtag Bitcoin. Might be hard for me to pull it up, but and then if I go to news,
you did Bitcoin Cash. Yeah,
I did.
See, look at the
Oh, that automatically filled. That's not good.
Enter.
See, this is the problem, right? I mean, you're looking for Bitcoin, and it takes you to Bitcoin Cash. It just happened to me, man. This is why B-Trash needs to go away, man. Dude, if I just did that, imagine a noob.
Yeah, maybe. All right, so what
how bad is that?
What's going on with which story did you find that was
the CBOE, the futures that launch on Monday, have announced that the margin requirement is 44%, which is unheard of in traditional futures market. That's insanely high. Usually the margin requirement for like oil is like 5%. Okay, so because of that, the CBOE futures with their margin of 44% is insane, right? And the futures contract is only 1 Bitcoin.
What does 44% mean? Like you can only
that means your leverage is 4-to-1, right? So that means that if you're gonna buy one contract on CBOE, they're gonna lock up like $8,000 of your trading account and put it aside.
So there's very little leverage basically that you can get.
Right. There's very little leverage. So that means Wall Street buying up, a bunch of Bitcoin and then dumping them on the market to profit from the futures is probably unlikely because it's just not worth it, right? I mean, if you can do like 50-to-1 leverage like you could on oil, then yeah, you can go and dump a bunch of oil on the market and profit from the 50-to-1 futures trade. But if your futures trade is only 2-to-1, like what's the point?
That makes sense.
So I'm not really expecting a huge effect on the underlying because of this.
Because the profit just isn't there. Yeah.
Yeah. Hold on, let me do a search for CBOE.
There it is. As traders wait, yeah.
Right there. That's the Bloomberg article.
That's crazy. That's a lot.
Traders await Bitcoin margin requirement. See, I kept saying I'm still waiting for margin requirements on CME. They haven't come out yet, or I haven't seen it. But
who is this woman talking about Bitcoin there? I don't even know.
Can you hear it? Probably not.
Sonali Basa. Okay, I've never heard of this reporter, and she's talking about Bitcoin. All right.
I can shoot you the link if you want to play it for the audience.
Yeah, let's take a look at it.
All right, I just shot it to you over Telegram. As I listen to it myself, because when you play it, I can't hear it.
Let's take a look. Copy link address, and then I can pull it up on this thing. All right, so let's take a look at it here. She's saying something interesting?
Okay. A little.
For some reason, I'm not getting this thing to come up. All right, I think I'll put it in the show notes. We'll figure it out.
Yeah, I'll throw it in the show notes.
All right. Any other stuff?
I stopped screen share, so that's my news. A 44% margin requirement. I mean, it's good. I mean, this will prevent some manipulation, right? Because they're just not that leveraged.
Yeah, that's interesting. Yeah, I maybe the news on Monday isn't gonna be quite as crazy.
Yeah, but like I said, like CBOE is not CME, right? That's why their contracts is 1 Bitcoin with a huge 44% margin requirement. If I had to guess, the CME is going to go like 20% margin requirement. I mean, they're just a lot more efficient at this with a lot more liquidity.
That's like a 5-to-1 leverage.
Right. So it'll be 5-to-1 leverage with 5 in a contract.
Well,
so the reason why you have 5 in a contract is because you keep it to serious players, right? Like for example, an oil contract is 1,000 barrels of oil, right? So $1 move in oil is $1,000 move in your portfolio. And now the margin requirement for that is like maybe $2,000, right? So $1 move in oil blows through half of your margin. So if you only have $2,000 in your account, $1 move in oil basically loses half of your money, right? So, but you're allowed to make the trade, and that's the point.
Yeah, I mean, that's essentially what you're gonna get with these futures. Is if you have 5-to-1, so, that's.
Right. So my best guess is like oil is like 1,000-to-1, but they give you like 50-to-1 leverage. My guess is with the CME going 5-to-1 on Bitcoin, they'll make you do like 10 to 20% leverage, right? 10 to 20% margin, which is 5 to 10x leverage.
Okay. Well, I mean, we all look forward to seeing how many people will be utilizing this vehicle to go long or short on Bitcoin. All right.
All right. Time to go for me, definitely. So let's
All
close
right,
out.
well, this song is done, and Tone has a seminar today. Be sure to check it out if you're in Toronto.
No 2x, guys. We did it. We're did it a month ago, man.